The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and it's my pleasure to be here Monday through Friday, 11 o'clock till noon, Eastern Time, of course. And what a fabulous turnout last night. We had a good time. We stayed until the lights went out. They have this automatic thing. It was the funniest. While in the middle of some part of this presentation, at the end, the screen just suddenly, the lights shut off, and a couple of lights stayed on, and the screen went up. So we had to wrap it up. It was unfortunate, but we had a really good time, and really good questions. Oh, let me do this. I want to show a chart here. And thanks, Jim, for pointing that out. Let me see. I'm going to get it over there. I'm going to slide it across. There it is. Oops, there it is, right? It's going to be very dark, but that's okay. I'm going to slide it across here. I showed subscribers this morning this chart. And let me just see how it's coming up here on Tiger TV. There. Oh, you can see enough of it. Now, what this is the S&P. This is the monthly chart, but it is not based on the month itself. It is based on the options expiration day. Now, look at this. You go from a trough. There was the, I can't remember when that was. It was 2003, I think. Yeah, I think it was 2002, 2003 low. You remember 2002, the S&P and the SMHs, if I recall correctly, did not do the retest. They made a low in October, did not do the retest in March, but the Dow and the other indices did a retest underneath the previous low. So what happened is the S&P went to A, B, C, D, E, pulls back, and then goes A, B, C, D, E again. Oh, it was unbelievable. Last night I produced a whole chunk of charts, and can I enlarge that a bit? I don't think I can. I'm going to try. No, I can't. I could not even tell you how many peak Ds there were. Yes, there were E's and even an F's, but the number of peak Ds that was significant, just to prove a point to those people who are absolutely brand new to the Chapman Wave methodology, was just extraordinary. Now, what we've got is based on this options closing chart. You go ABCD, this is from the March low of 2009, pull back very sharply, and then you go ABC, and this is leg D. Isn't that interesting? And then he's also drawn in the channel lines. He's got his channel lines coming right up to test the repellent area of the last 15,540, whatever it was, high. No, sorry, on the Dow, in the S&P it was, I shouldn't know this. I look at it all the time. Anyway, it was the high of May. And this is extended up, because there were a couple of days after options expiration. So I thought that was really interesting. But I use monthly charts. And because I use monthly charts, it means that I'm looking at, look at this. If I can find it. This is the black chart. This is peak C in the monthly if there's no new high. And we had spectacular moves off the low of just 4 days ago, of Monday. And what's happened is that channel line, that resistance zone in the monthly chart, was a repellent zone, and the market pulled back. The S&P pulled back very sharply, turned around on Monday, had a very nice run to the upside. Now, as far as I'm concerned, I continue to use monthly charts, use them forever, and I do not use any extrapolated data. It is the monthly chart based on TradeStation's data. And I have peak C at 1687.18 if that high is not taken out by tomorrow at 4 o'clock. And I have to tell you something, even though it's been spectacular, the last 3 days move, and I'm going to explain something else in a few moments, I am expecting that the real test is going to come by tomorrow at 4 o'clock, going into Monday by about noon, as to whether or not we've begun a brand new buy signal that hasn't yet gone to a buy mode, but a buy signal in the daily charts reversing the sell mode, or whether or not this is the rebound and you're about to reverse quite sharply down. We'll see. Day is young. So let me just explain it was. That was an options chart. No, that was the S&P, and they were able to use it in such a way that they were able to organize it so that options expiration Friday, the third Friday of the month, was in fact the change of bar. So that Monday that continued the S&P's price after the Friday expiration started a brand new bar. That's all it is. That's all. And I thought it was fascinating. Of course, this person does a lot of Chapman Wave work, so I really appreciated that. Now you can hear the tools in the background. Yep, I got the window open because it's actually a very beautiful day. The humidity pulled back a little bit. All right, that'll be quiet. It was just a garden. And this is, the garden. This is called the Garden City, Newton, Massachusetts. Very beautiful, beautiful city. 13 boroughs. Not boroughs. That's New York. 13 villages. And in the summertime, in the beautiful, peaceful Newton, all you hear are lawnmowers and blowers. So here we go. I'm looking at something that I think is really important. The volatility index this morning ran down to 16.34. Last night, now, in my opening call, we've had some really wonderful trades. I messed up. Yesterday, I went short two indexes, and I had shown the inverse. The chart had made peak D, and I should have had respect for a peak D. I should have said, you know what, if there's a chance that it's peak F in the volatility index, then have patience, wait a day or so, get that evidence. But I went through with the trade. We took a lot. We gave back profits that we've made the couple of days from the previous couple of days. I'm upset about that. I hate taking a loss, even though it's just really a break-even trade. I hate it's just dumb. When I look back and I say, how silly. Let me just explain what I'm looking at here. If I go to, I'll show you. The IBB, I've been talking about this for a while, is the NASDAQ iShares Biotechnology ETF, the long side, let's call it. And I suspected we made a peak E top, and that could turn out to be a fairly significant top. Why? Because it was also peak E in the weekly chart, and it had fallen enough with the technicals to say that was a sell mode in the weekly. So we had a fabulous trade put on last week. And I took off the trade for a very nice profit. Could have got a better profit. We got a really nice profit. And what did I do? I said, let's short it again. But that was silly because BIS. Now, I don't advise everybody to do this. I told subscribers before, this is a very lightly traded. You have to get the trend right. And what happened was that BIS daily had made a peak D. I just explained to you that last night I was demonstrating how many, not 10, 12, but dozens of times I showed charts, monthly, weekly, dailies, going to at least a peak D and then having a sharp pullback. I should have respected that. And I should have said, you know what, a peak D with a stochastic getting a little toppy, wait a day. And I did not do that, so we gave back gains. And I apologize. It was very silly. Will it become a trade again? Well, it's pulled back a little more. I have to respect. Now, I talk about respect in the markets, and when I talk about respect, what I like to point out is that if you have whether it's a technical position or whether it is a fundamental position, or even more importantly, if it is an emotional one that says, I feel I am right. Well, you can feel anything you want. Hands up. You tell me. I want to see hands around here. Hands up for anyone who's had a feeling that the market should do that, whatever it is, and it didn't do that. And you looked at the market and said, did you not hear me? Did you not hear me? the market just ignores you. It doesn't even know you. It couldn't care. Yeah, on the day, we've got hands showing already. That's, it's hubris to turn around and think that you're going to you could have $1 million, you could have $1 billion, and I guarantee you will not change a trend in the market for more than a few seconds, because that trend is really important. So this is let me sum up what I'm looking at here. The Dow is up 130, was up more earlier on. It's right now at 15,040. The S&P is up 12 at 1660. The comp index is up 29 at 3405. You've got gold down 4. How much? I mean, gold down 4. I just can't believe this. When you're out, you're out. That's what I'd say to subscribers. When the tide changes and you're at the party and you are talking about something and nobody cares, you're out. If you're the person at the party that everybody, the eyes are just following you wherever you want, wherever you go, and you just say, blue. Everybody says blue, 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 blue. And that's what's happened to gold. You are out. You're in the corner. You're not even in the corner. People aren't even seeing you. So just remember that gold will have a really good snapback rally, and you have to treat it as a snapback rally if and when it occurs. Same thing as we looked at charts last night at the meetup at MIT for the Boston Investors Group. We looked at the TLT also getting ready for a snapback. I'm going to go through those things as we move along today. I just wanted to clarify that sometimes my impression was that the IBB was going down. I had a sell signal that went to a sell mode. It did make a left side, right side price time match, which I ignored in a better time frame, and didn't go down to 164.19. It went down. The IBB went to 164.14. It did. It touched it by 5 cents. Good. I forgot about that. But it was in 2 days later, and then it ran up. Well, it closed above. So in a sense, that's a successful test, and it's gone higher. So do I want to short it again? I absolutely do. But you know what? I've got to respect the fact that the MACD is trying to turn around. I have to respect the fact that the stochastic actually made a higher low on that last pullback. I have to respect the fact that it's gone against the trend that I thought it was going, that it was working for. It went against that. I have to respect that. I have to look at this and say, is this a single leg A to the upside? I'd call for a doji close in many of the charts for today. Could this, in fact, turn out to be a doji? Yeah, it could turn out to be a doji. The weekly chart is still very poor. I think on my part, it was just bad timing that I need to think about. Does it arch over? Does the 120-minute chart suggest that it is A, B, it's in leg C? Could there be another part? Oh, no. This is A, B, this is in leg D. Is it getting ready? That's what I have to assess, not my emotions. I'll be back. And you've got bonds up 10, and you've 10 ticks, and you've got the dollar up 15. I'll be right back. Basil Chapman, 877-927-6648.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. I had a question in the den. What is the level of frustration when we're in the notation on one of my charts is lost? It happens occasionally. Now it's less than it ever used to be. But when there's a sudden shutdown, electrical, whatever it is, I lose the charts that I was working on, the most recent ones. But yeah, it's high. But what can I say? It's the way it is. And a couple of things. I'd spoken about. Look at this. I've spoken about I wonder if I can get it right now, about the legs in the Dow on the 120-minute chart. In the diamonds, I didn't see this last night. I thought it was a double top, but in fact it was a peak C. We've gone to a peak D, a leg D, leg D. So if there's no new high bar above 150.42, you've got, in fact, a leg D going to a potential peak D in the 120-minute chart. But the stochastics at 94% and the MACD is expanding. And all I can say is that's the technique that I use. It's called the squash, for those of you who have done my Master Trader series, and between two key indicators. And that says, hey, the stochastic is giving you the torque for the move up. If the MACD fast-moving average continues to hold very well, there might not be much of a pullback. And you've got to watch that real closely. There are other techniques here as well. Let's say 149.19.3 in the diamonds, 149, somewhere around 149.50 to 139.40 is very strong support. I'll go to my first caller. We've got Mike in Long Island. Hi, Mike. How are you?
Good. How you doing?
Very well, thank you.
Okay. Is lumber liquidators, should that be liquidated?
You know, I've spent a little time looking at this particular chart because I have an alternate wave count in the monthly. And if I put the whole thing together, because I spoke quite a lot about real estate last night, and if I'm putting this together correctly, the peak D in the weekly chart has to be taken seriously, number one. And in the daily chart, there certainly was a very good sell signal. But all it's done, LL is a symbol, folks. Lumber Liquidators Inc. They've got bargain lumber products, and they've just been absolutely on a tear from the tens or something, from about $13.43 back in September of 2011 to $90.92 of the high. Let me double check that was the high. Yep, back in May. So now this is what I'm looking at. There are a couple of signs that tell me that I must use my technique, the technique of the Chapman wave, to assess this, because my instinct is to say that there should be a pullback and it should be a high-level consolidation. And now we're going to say, hey, that's just instinct. Now, why don't you look at the charts, mister, and do your homework? And I do the chart, and I say that the gap from 70.85 on the 23rd of April, that was the high. Next day, it gaps up, and the low is 74.70. So that's a 3-point gap. And that 70.85 level, just 4 days ago, 71.63 was the high. Now, previous highs, when get tested from a big move up, they become support, are very important, and that's another point that was made last night, which I thought was very good. A couple of people mentioned, don't forget that that on Monday, we just got in, the S&P just got into the highs that were made at the previous top. So that was way back in 2007. So I always respect former resistance that becomes support, former support that becomes resistance. That's just a rule of technical analysis. Now this is very interesting because it says on the weekly basis the stochastic is okay at 33%, not great. MACD is trying to turn up. Could this be the W formation in the MACD? Well, we will only know if I would give it, my answer to you is, if you are holding lumber liquidators, I would much rather see you place on part of your position a tighter stop than to make the decision and then let the market make the decision. Where would that stop be? I would say that if it pulled back to underneath the bar of the 25th, that was Tuesday, I think it was, and it goes underneath 76.10, I would just take some money off at that particular point. Why? Because then it'll say that the weekly chart is starting to make a habit of closing underneath the 9-period exponential moving average, and that would suggest, because the MACD and stochastic are turning down, they're only just now really giving indications that it could be a deeper slide. I would suggest that some part of the position, but a core holding if you've got it much lower down, because if you look at the real estate market, the area that can benefit the most, if there's a little bit of a slowdown because of rates and people get a little nervous and whatever, they still want to do repair work. And that repair work is what I really think is going on. And that's one of the reasons why Home Depot, let me just give you Home Depot here for a second as we go to a break. Yeah, Home Depot is still holding well. I'll give you a little summation when we get back. I think it's a very good question. I think a lot of people would like to know the answer. Let's look at it together. I'll be right back.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We're back. The Dow is up 124. S&P's up 12.7. Don't forget, this is Thursday. Special program with Larry Pesavento at noon. And Futures Hour, this is, there are certainly patterns in play here that I believe he's going to be able to show, and that should be really interesting, because I'm just dying to see the interpretation of how we're looking at the expansions in the garden. Either goes to a butterfly, maybe we're looking at something coming up in gold. We're going to be listening closely to that. So let's go back to the LL, which is Lumber Liquidators, bargain lumber products. Yes. So, Mike, you have a position in this?
I wanted to just get your thoughts on, I took your course on the moving averages, which was
right.
Excellent. And what I noticed, looking at the daily chart, is that this has breached the 50-day
correct
average. It hadn't done that for
quite a while.
For a very long time.
Right.
Now,
Mike, you're breaking up. I'm just going to say this: that if you look at the candle of the monthly, that long-legged wick after that candle of last month, the doji candle of last month, which. I mean, many terms for this particular type of candle. At this particular point, I just want to say that it looks to me like a doji candle that has the answer coming up, and that answer is right here, that there's going to be a trading range between 90 and probably about 69 and maybe 69, maybe 71, but 69, 71 to 69. And if 69 is breached, then 67.47 will be the 9-period moving average in the monthly chart. That's going to be really important. But I suspect that the doji candle, the body of the candle being formed in this long-legged doji at 80.78, between 80 points, I'll tell you right now, between 80.55 and wherever it closes tomorrow afternoon, the body of that candle, even if we go up or even if we go down, we'll be back to the body of this candle within 3 months. So that's why I'm saying it's like a magnet. I wouldn't get out of a core position, but I would lighten up on a pullback, and that pullback would say you can start thinking about it if you take out 76.10, the lower. But absolutely, if you take out 71.63, then you're pretty much going to be saying, hey, that 9-period moving average on the weekly, on the monthly, has never been tested, not since it broke out back in January of 2012. So that's the way I would look at it. Try to keep a core position, use a trading position, and that trading position should see some kind of a pullback, and maybe the pullback's already occurred, but you should be able to see this thing travel right back, if there is a pullback, to that 80-ish area. And if there is a spike above 90.92, it says, don't worry, you're still going to come back at some point to that 80.82 within a couple of months. It's like a magnet. So I hope that helps you.
Thank you very much.
Thank you. And good observations there about the moving averages. Let's go to Brian in Jackson. Hi, Brian. How are you?
Hey, Basil. How are you doing? Well, I'm doing pretty good. I should have taken your advice the other day on the GLD trade. Unfortunately, I waited one day too late, and it got down again yesterday.
Right. I was thinking of you. Those, when the tide has changed, you just... It's so difficult to play the counter trend trade. Sometimes you're thinking, it's about people who've missed big moves in the market. While they're waiting for a 10% correction, the market moves up 20%. And this is the same thing here. While you were expecting some kind of a decent bounce to get a nice percentage gain, plop, it turns into some kind of a longer-term trade because now you have to wait for it to get back. It's tough.
Yeah, I think that gap down caught a lot of people off guard and by surprise at yesterday's gap. But
Brian, there are two things. It's yesterday's gap. Well, first of all, it was the gap down to the breaking the 130.51 area into the low of 123.33 on the 20th. No rebound to make to go above the candle high of that day, and then plop. It goes down again, and today, yet again, there is no V, not yet anyway, a V-shaped upside reversal. And one of my concerns is that for those who are trying to play the GLD, is that the dollar is in leg C up in the daily, and until it makes a D, I would think that any gold, just even a smattering of a pop-up, is going to be knocked down again, because the dollar is actually, the way the dollar's acting right now, going to leg C with the stochastic and the MACD the way it is, that's telling me that the dollar is trying its very best to get to the area. This is a very tough area. It's between 83.71 and it's trading at 83.12. And then that 84.50 high, that's going to be the real test. If it breaks above that, I showed a chart the other day, I showed it actually here as well, of the UUP, if I can just get it right now. The UUP, which is the trading vehicle for the dollar, it's called the US dollar bull. And what's interesting about that, I think they misnamed it because it's been a bear for so long. But if that UUP, which is trading at 22.54, finally can break that long term, 2.5 year resistance in the 23.14 area and finally get to 23.50 to 24, that'll be a big breakout for the UUP. And that would actually correspond probably to our market starting to pull back a little more. So I thought I'd just mention that just to give you some kind of perspective of what I'm looking at.
I guess the biggest lesson I learned with the GLD is it's just probably better handled with options on my end because it's so, gaps so much.
Yes.
Would you agree with that? Or?
Yeah, two ways, and this is something I actually discussed last night. What I was saying is, if you were looking out, I discussed it on the show the other day when I had a call, I said, if you were looking out a couple of months to buy the calls, the option calls, and this one person came up to me afterwards and said, calls? What? You're talking about the coal ETF? K-O-L? I said, no, it's just the accent. These are calls. These are option calls. So she got the point that they were the bullish side of the options. To buy them further out on something like the GLD, because it gives you that room. And I have to tell you, by any measure, there is a really good chance that at some point over the coming weeks, the GLD will be above 118.69. So you give up a little premium, but at least it's a safer way with a fixed amount of money that you know that's what I can lose, and that's it. Case closed.
Right, exactly. But another reason I called you, I put on a trade this morning. I bought the XPXS at $10.74, and there's a downtrend line that starts back around February, runs through April. Do you see that downtrend line I'm talking about?
Okay, now there are a couple of things. You're talking about the you're talking about what?
Oh, on the XPXS, which is the inverse 3 times the bear ETF for the SPY.
Oh, okay. I've never actually looked at that. No, I've got the wrong thing. Wait, tell me the letters again.
XPXS.
XTSS.
No, XT, like Paul.
Oh, XP. Oh, gee, I don't know if I've ever even looked at this. I don't get that. X for X-ray, P for Peter, S for Sam, S for Sam?
X-ray. XPXS.
Okay. Okay, XPXS. Got it. No, I don't. Oh, it's SPSX. Oh, okay. Yeah, I wrote that the very first time. Yeah, we have a little accent diversion here. Yeah, I know this well because we had this as a trade just recently. You see, here's the other thing, and that I got so furious with myself. The SPXS, folks, is 300% short the S&P. It's called the Direction Daily S&P 500 Bear 3 times shares. And anything you want to know about the Direction shares, go to the front page of TFNN. Now look at this. It made a peak D. Why would I have wanted to do a short again yesterday? I should have had the patience to wait. Now what's happened is it's pulled back pretty severely under the 9-period moving average. That's the reason why I'm saying I have to have respect for the power of this market to rebound the way it did.
There's a downtrend line I was talking. Do you see that downtrend line I'm talking about across those tops that it's going back to? Okay.
Okay. Let me just draw this now. Okay. Now we're going to go. I'm just going to squeeze the chart. There we go. Are you talking about the highs? Let me just do this. You tell me if you can see my chart.
From February to April to
and now it's gone. It's broken above it. Correct.
It's right. The downtrend line across those tops is pulled back to today is right at the downtrend line. Yes, broken above the downtrend line and pulled back.
Correct.
Today.
Okay. Now what I'm looking at is that former resistance should become support, and the MACD is still quite good, and the stochastic has pulled back to 64%. But, and this is really important, what I would like to see, let me just get the 120-minute chart. 120-minute chart has gone peak A, peak B, and it's only gone to a C, and that one went to an A, a B, and a C and failed. And this one went there. So, now what I'm looking at is, if the SPX, so you've gone long at $10.70-something cents, right?
10.74. Mm-hmm.
74. Okay. I'm going to make a suggestion to you. Just keep it in mind that it might be worth it if you are looking to put in a stop at this particular point. If it breaks the low of the day, 10.60, I wouldn't hang around too long, and I'll explain why. Because that would make the SPY right now, that would extend the leg A up and it would turn the 160.60 area into very strong support. So some part of your position should have a stop, just a penny below the low of the day, right? That's number one. Number two is you're going to be looking really good. Let me see. I've only got peak C in the daily, in the 120-minute chart. Wow. All I can say is if the volatility index remains at 16.70 instead of spiraling up now, there could be another burst of energy, and this is where you actually have to say, gee, maybe end of the month funds are starting to help and come in. So I'm just saying to you, please be careful here. I would not want to hang around, because if it closes really strongly today, there'd have to be some real bad news tomorrow to gap down. And what might happen is it gaps down, but all it does is it gaps down and fills some kind of a break, and then acts very well tomorrow. So while my weekly charts at this particular point are still saying, hey, sell signal to sell mode, the SPY daily is saying the actual position of the short, you might have got it perfectly, but you will only know if the SPXS goes to, it really has to go above 1075. That was the gap down high today, right? So if it breaks above 1075, you will see the Dow pull back probably to about plus 90. You'll see the S&P probably at 1283 right now, probably at about 10.20, and that'll be encouraging for you. But I'm just saying, I would normally say I like the trade. I'm just a little concerned that the stochastic is so low that it's really buying pressure. So I hope that helps you.
Thank you very much, Basil. Appreciate it.
Okay, thank you. Good luck. So let's go to Dan in North Reading. Hi, Dan. Dan in North Reading, Massachusetts. Good to meet you last night.
How you doing? Yeah,
I'm doing well.
Thanks for the great lecture. Sorry I had to skip out early. I actually wanted to ask you about the bonds and the S&P, because this time I noticed kind of seems like the bonds and TLT are going down with the market, and wonder what you thought that meant going out long term with peak D and the S&P and Dow.
Okay, now we actually spent quite a bit of time last night on this, and let me just discuss a couple of things here. Any rally, well, let me go back to this chart that I showed yesterday, and I also showed it last night. I don't know if you were there to see this chart. I showed this particular chart here. It was the weekly chart, and I said, by any calculation that I make at this particular point, I have to respect the fact that the breakout in the TYX, 30-year T-bond yield, the 10-year T-note yield, and the 5-year T-note yield, that's the white, gold, and cyan color moving average price points here, says that this is, I have to consider that it's leg B. I could say it's G, but that would be unusual at this particular point with that kind of strength. So I'm calling it in a weekly chart leg B, and I also said from my eye and my technical analysis, it's really hard to time it because it's a weekly chart. It wouldn't surprise me if there's no new high in bond yields, which are at 36.30 in the 30-year. They're at 26.53 in the 10-year and 15.57, the weekly chart of the 5-year. And that if on Friday they're not close to the highs, I suspect that next week we could get the pullback in the bond yields, a rally in bonds, but you have to treat it as a counter-trend rally because we're still going to have C and D on the upside. So I'll be back talking with Dan from North Reading, talking about the TLT, the Lehman 20-year T-bond fund. Basil Chapman, Dow's up 121, S&P's up 12. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, folks. I'm Steve Rhodes with TFNN.com, and the trend is your friend until it changes. A free special report is now available on the homepage of TFNN.com, and if you have money in the markets, this free report is a must. If your strategy is buy and hold, this report is a must. If you're a day trader, a swing trader, a Forex or options trader, or just getting into the markets, this report is a must. And it's the second best gift you'll ever receive. Look, if you buy a stock and the general market is trending in the other direction, you've reduced your odds of buying at the right time by 70%. Instead, let me teach you how to get that 70% Advantage Plus. The Plus is a free trial to my daily newsletter service, Mastering Probability. There's no upfront deposit, no charge to your credit card, and I compress decades of education into each daily newsletter. This is a limited time offer, so act now, and I'll teach you how to take the trend and turn it into your best friend. All the details are on the homepage of TFNN.com. Act now.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. We're on with Dan from North Rain. Don't forget their fabulous shows just right through the day for you. You've got right now we're going to have see what's the time? Last segment of the show. So we've got Larry Pesavento, then we've got Daryl Martin, Dave White, being Thursday. Oh, you've got Andy Hecht, and then, of course, you've got Tom O'Brien. So just great shows all the way through. And they're all archived. So we're talking with Dan about bonds. I'm looking at the TLT, the Lehman iShares 20-year Treasury Bond Fund. There's a trend line that is hit on the downside, just nicked to the downside. And this is leg A to the upside. If I look at the USU bonds themselves, this is the contract, this is leg B, and so far it's a very small little peak A and a little peak B, and 136 and 630 seconds is the very strong resistance. How a 9-period resistance, and it hasn't broken and closed above it more than twice in the last. This is broke down back in May of early beginning of May of this year. Now look what's happened. The stochastic is not great, and the stochastic is not great. So I have to treat it as a counter trend bounce. Number one. Number two is, the TLT at 109.36, it could bounce over a period of a week or two, and it could try to get to the 111.48 area. That'll be the next resistance of the trend line. But it's the gap low of 111.62 that's going to be very important. 113.79. That candle is going to be a real challenge for it. That's number one. Number two is when you're looking at the TBT, I've got an alternate count, and the alternate count says it's probably only leg C, not leg G. I mean, peak B made, not peak G, because the MACD is still good and the stochastic is still good. So the TBT is hugging the 9-period moving average at 73.88. It's at now 73.15 is that support. So I'm going to ask you a question by saying I can see a bit of a bounce in the TLT, but bond yields, based on my chart pattern of the weeklies, suggest that they're going higher. How high? I really can't say, because it's been a powerful leg A and B to the upside. My suspicion is the candle high of 38.28. They're at 35.47 now. So 3.8, that's kind of going to be, for me, the real test. And what's the support?
Basil, putting that together with the S&P and the Dow monthly, do you foresee, making a peak D in the Dow and S&P, and then the equities head down, and then the bonds head down at the same time?
At this particular point, I have to divorce myself from the bonds, because you've got the Fed in play here. That's number one. Number two, independently, the market is saying, look, we can handle these slightly high interest rates. It's sort of saying right now. I don't know how long that's going to last for. We got the test. We pulled back. There were real bargains. This is what people are thinking. And they've gone in and they've bought them. But my theory here is that there's no chance, I shouldn't say no chance, but I'm going to say there's no chance tomorrow at 4 o'clock that the Dow goes to 50,542.41 to continue leg C. I think we've made a peak C in the weekly chart, and the history of this, as I showed my subscribers, I spent a lot of time saying that the history of this particular pattern is that in all the big buy signal to buy modes on the monthly chart, talk about the S&P for the moment, peak C has been a fairly mild pullback, and then you've gone to D, and D is the challenge, and it can even go to E. But if you only have a very short, like a 1-month period, which has happened fairly often, going from peak C, pull back, and then 1 month later, you're at leg D, that's very positive, but then you got to start looking out, because the next peak is one of significance. So as I stand right now, I have to stand back and say, okay, market, tomorrow at 4 o'clock, you tell me what's going on. So far, it's been a high-level consolidation. I am impressed that the volatility index stays in the 16s. That is buying pressure. Hope that helps you, Dan.
All right, thanks, Basil.
Thank you very much for calling. Folks, stay tuned for Larry, and I will be back tomorrow. Thanks for being here.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing, and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.